Welcome. Accounting and Management Made Simple is your channel of choice where we break down complex and difficult accounting and management principles into simple, understandable concepts. Whether you are a student preparing yourself for exams or a professional looking to apply knowledge practically, this channel helps you to grasp and understand complex key topics with ease. Please subscribe, share, like, and comment. Thank you. Hello students. Once again, this is your tutor, Accounting Made Simple tutor, Samuel Muchai. And I want us to do a question. I want us to solve a question as CPA 1. CPA 1 Financial Accounting, May 2018, question 1. May 2018, question 1. Now, the question reads, Asuba Enterprises is a business run by a sole trader. The following trial balance was extracted from the accounts of the business as of 31st of March 2018. Is that 1st of March 2018? We told capital 1852, 800,000. Inventory, that's opening inventory, 242,000. Sales, 4.2 million. Purchases, 1.6. Electricity, 22,300. Discounts received for the 2,700. Purchases, returns, 6,400. Like I've always said in the past, ensure that as you read through the question, always read through the question. And as you read through the question, you are already formatting your answer in your head. You're already formatting your answer in your head. You're already realizing the items to include where every one of those items falls. So discount allowed, so we know it's an expense, 24,200. Motor vehicle expenses, 15,800. Drawings, 320,000. Bank balance 245,110, salaries 1080, insurance, trade receivables, irrecoverable debts. Irrecoverable debts, you must know that is the other name for bad debts. Allowance for receivables, that's allowance for doubtful debts. Allowance for doubtful debts. Trade payables, general expenses, 9% loan. Every time you find that there is a loan somewhere, remember to compute the interest expense, even when you're not told. Even when you're not told under additional information. Interest on loan paid, as if you are told how much has been paid of the interest. Land and building, accumulated depreciation, equipment at cost, accumulated depreciation on equipment, motor vehicles, accumulated depreciation on motor vehicle. Number one, you are told only 10 months salary are shown in the trial balance. An equal amount is paid for salaries for each of the months. So definitely, then you're supposed to compute the monthly salary, but you know that 10 months have been paid, meaning 2 months have not been paid. Number two, as of that 1st March 2018, the 2,000 shillings had been prepaid and therefore prepaid for insurance. So insurance, you subtract that 2,000, the balance you take it to income statement as an expense, and that too becomes a prepaid prepayment, which is a current asset. Whereas 4,100 was owing to general expenses. And therefore you get the general expenses, you add 4,100 and then you record general expenses payable amounting to 4,100. For the 6,000 have been charged to general expenses for the owner's private holiday. That is drawings. As of that 1st March 2018, inventory was valued at 225. You get the closing stock and the inventory in the balance sheet. A customer owing 5,400 was declared bankrupt. This amount is to be written off. So you debit bad debts account, and you must realize that you already have bad debts expenses in the trial balance. So you're just adding more. You add 5,400. We are told it has not been written off. The one that is in the trial balance, it has been written off, but now this was need to be written off more. More need to be written off. So you add the 5,400 to what is already written off. Then we are told an allowance for receivable. Once you get your debtors, you subtract bad debts, which we are now subtracting 5,400. The remaining amount you compute 3% to get allowance for doubtful debts, so that you can know whether that allowance is the same as the allowance in the trial balance. If there is a difference, an increase we always say is an expense, and a decrease, we always say, is an income. You know how to handle that. As of that 1st of March 2018, land was valued at 1 million. Land is not depreciated. So you get the land and building, you subtract 1 million, which is for land, the remaining is depreciated, and you are given the rate for the depreciating building is 4%, equipment 25%, motor vehicle 40%. I want to repeat again. When computing depreciation, you must know the difference between depreciation on cost. You look at the original purchase cost, but depreciation on reduced balance, you get the net book value at the beginning of the year. You get the balance shown in the trial balance minus the accumulated depreciation at the beginning to get the net book value at the beginning of the year. There are no additions or disposals of non-current assets during the year. So quickly, we do our workings, and the first working you deal with is loan interest. It is loan interest. It is loan interest. The first working is loan interest expense. The first working is loan interest expense. And we are told our loan is 9%. 9% of 1,500,000. 9% of 1,500,000. 9% of 1,500,000. 0.05. 0.09 of 1,500,000. We get 135,000. We get 135,000, and we are told that later at the trial balance, we are told interest paid is 120. So this is the interest expense, the total interest expense for the year. The total interest expense to charge is 135,000, but we are told less interest paid. Less what? Less interest paid. So we thought interest paid is 120,000. Giving the balance is an interest payable of 15,000. We get interest payable of 15,000. Interest payable of 15,000. And therefore, 135 is our interest expense in the income statement, but we have a current liability of 15,000 called interest payable. Number one, of additional information you are told, only 10 months salaries are shown in the trial balance. In other words, you're being told it is only 10 months salaries which have been paid. It is only 10 months salaries which have been paid. So, if we get our salaries, it is 1080. Salaries paid. Salaries per month. Salaries per month is equal to salaries paid divided by 10, which is equal to 1080,000 divided by 10, which is 108,000. That is the monthly salary. So total salaries, both paid and non-paid for the year, is 108,000 times 12. This gives you the salaries expense. That gives you the salaries expense. 1, 2, 3 times 12. We get salaries expense of 1296. We get salaries expense of 1296. We get salaries expense of 1296,000. But we are told we have this is for 10. We have only paid for 10 months, which is 1080, and therefore for 2 months we have not paid. And we know monthly salary is 108. Unpaid salaries. So we say salaries payable. Salaries payable. Salaries payable. It is 108 times 2. 108 times 2 times 2. Because we are told what 1080 is what was paid for 10 months. Now the remaining 2 months, because the monthly salary is 108 times 2. 108,000 1, 2, 3 times 2, we get a figure of 216. So this is salaries payable. This is salaries payable to be shown in the balance sheet as a current liability. That is salaries payable to be shown in the balance sheet as a current liabilities. Number 2, we are told, as the 31st March 2018, 31st March 2018, as that first March, that's the end of the year. That first March 2018, shillings that 2,000 had been prepaid on insurance. So if we get our insurance balance from the trial balance, insurance expense account, the balance brought down for insurance Insurance is 154,000. 154,000. We are told that that 2,000 is prepaid, so it's not an expense. So we cut it down. We cut it down. It's not an expense, so we don't take it to P&L. We cut it down. Don't take it to the income statement. We don't take it to the income statement. So 154 minus 32. We only take 122 to the income statement as an expense. We only take 122,000 to the income statement as an expense. We only take 122,000 to the income statement as an expense. We are told, well, 4,100 was owing to general expenses. So general expenses, what we have not paid everything for general expenses. We have not paid all our general expenses. We are told we are owing. Balance brought down from the trial balance. Balance brought down from the trial balance general expenses is 67,800. 67,800. 67,800. And we are told we have not paid. So remember, we recognize expenses when incurred, not necessarily when paid. When incurred, not necessarily when paid. We recognize expenses when they are incurred, not necessarily when they were paid. And therefore, we add 4,100. We add 4,100, but we are saying there is something called general expenses payable. General expenses what? General expenses what?
Yeah.
Payable. So we are adding 4,100 from general expenses. We are adding 4,000. So general expenses payable. General expenses payable. Then we are told, number 3, 46,000 had been charged to general expenses for the owner's private. Within these general expenses, we have some 46,000, which is owner's private expenses, private holiday. So that is drawings. So we remove it from general expenses and take it to drawings. We remove it from general expenses, we take it to drawings. And from the trial balance, you can see we have a drawings account of 320,000. We have a drawings account of 320,000. So if we create drawings account, and then we say balance brought down is 320,000. Balance brought down is 320,000. And here we are told we remove 46,000 from general expenses, we take it to drawings. 46,000. We take 46,000 to drawings. So we add 46,000, and we are saying it is coming from general expenses. Then we are told the closing inventory was 225. Closing inventory is 225,000. We know where to take it. It's a current asset and a reduction of purchases. Cost of goods sold. A customer owing 54,000 will be declared bankrupt. This amount is to be written off in full. Then debtors, bad debt expenses account. We get the balance brought down of bad debt. Look, every time you are reconstructing an account, you must check whether it has balances from the trial balance. You must check whether it has balances in the trial balance. You must check whether it has balances from the trial balance. And we have irrecoverable debts amounting to 14,200. 14,200 from trial balance. And then we are saying trade receivables. Our trade receivables account. The balance brought down from trial balance. Balance brought down of trade receivables is 11,01,400. 11,01,400. And we are told we write it down with an additional information number 5, 5,400. 5,400. So we add 5,400, and we come here, we say bad debt. We reduce our receivables. With the 5,400. We reduce our receivables with the 5,400. Yes. Then we are told this amount is to be written off. Now, an allowance of receivables is to be maintained at 3% of the remaining receivables. So our balance carried down. Once we get our balance carried down, we now provide for doubtful debts. You must realize that we provide for doubtful debts after we have deducted all bad debts. We provide for doubtful debts after we have deducted all bad debts. So 1101,400 minus 5,400, we get a figure of 1051 thousands. And we are told now on this, after deducting bad debts, we calculate allowance provision for doubtful debts. Provision for doubtful debts, basing ourselves on the trade debtors after deducting bad debts. Trade debtors after deducting bad debts. Trade debtors after deducting bad debts. And therefore we apply, we thought to check, the rate will be maintained at 3% of the remaining trade receivables. So 3% of the remaining trade receivables, 0.03 of 123, we get a figure of 31,530. Once you get the closing provision for doubtful debts, always go back to the trial balance. Always go back to the trial balance. If you don't find any provision for doubtful debts in the trial balance, that figure becomes an expense in the income statement and a deduction from trade receivables in the balance sheet. Or a deduction from trade receivables in the balance sheet. But if we have an opening provision for doubtful debts, you compare with the closing that we have already calculated to find out if there was an increase or a decrease. We say if there is an increase, we say is an expense. An increase in provision for doubtful debt is an operating expense. A decrease is an income which is classified as other incomes. Is an income which is classified as other incomes. An income classified as other what? Other incomes, as other income. So if you go to a trial balance, our trial balance figure tells us our allowance for doubtful debt is 31,530. So it is still the same figure, 31,530. And therefore, we are not increasing, we are not reducing. So once we get the trial balance to the balance sheet, we will get our debtors 1051,000. We subtract 51,530 to get net trade debtors. To get net trade what? Trade debtors. Now we are told, as of that 1st March 2018, land was valued at 1 million. Land is not depreciated. And then you are given the depreciation rate for building, equipment, and motor vehicles. So building, so if we say depreciation expenses, building, equipment, and motor vehicle. We are told building is 4%, equipment is 35%, and motor vehicle is 40%. Now, for the building, if you look at the trial balance, we have been given a figure for land and building, 3,400,000. And therefore, because out of the 3,400,000 of buildings, we are told land is 1 million, and we are told that we are not depreciating land. So you subtract that 1 million from 3.4 million, you are left with 2.4 million. So you multiply 4% with 2,400,000, 0.04 times 2,400,000, 123, we get 96,000. We get 96 what? We get 96,000. We get 96,000 for building. 96,000. Now, for equipment, we are told it is 25% per annum on cost. So the original purchase cost of the equipment original purchase cost is 220,000. 0.25 of 220, 1, 2, 3, you get a figure of 55,000. So you get a figure of 55,000. And please mark that we are told motor vehicle is on the reducing balance basis. So you get the original cost minus accumulated depreciation at the beginning of the year to get the net book value. So we get original cost for the motor vehicle is 260,000 minus the depreciation at the beginning of the year showing the trial balance 132,500. 132,500. Giving us a figure of 260,000, 260, 1, 2, 3, minus 132,500, we get a figure of 127,500, then we apply the depreciation rate times 0.4. We get a figure of 51,000. That becomes the depreciation expense for motor vehicles. Depreciation expense for motor vehicles. We are told there are no additions or disposals of non-current assets during the financial year. Then you're supposed to prepare the income statement, the statement of financial position, and then explain some few things here and there. So let's do the income statement. We have Asumba Enterprises. Income statement for the year ended that year, 31st March 2018. So our sales is for the 214,500. Our sales is 42,14,500. Always remember to have your format in the head. You can never go to a financial accounting exam before you have memorized the format for the income statement and balance sheet, for sole proprietorship, for the company accounts, and for partnership. Even the format for statement of cash flows. You must remember sales less returning hours, get net sales, less cost of goods sold, opening stock, add purchases, add carrying hours, less returns, get cost of goods available for sale, less closing stock. You get the cost of goods sold from sales, you get the gross profit, then add other incomes, get aggregate profit, then you less operating expenses to get the profit for the. You must remember the format so that you eliminate what is not there in the question, but whatever is there, you capture it. So there is no sales returns. So you say less cost of goods sold, less cost of goods sold. And we have an opening stock, 242,000, opening stock. There at the top, the second item, 242,000. We add purchases. And always, as you do that, find out whether any of the items in the income statement is being affected by your adjustment. Don't just go to the trial balance. Move, don't be in a hurry and cause trouble. Always check whether any of the items which is in the trial balance has been adjusted by our workings. So our purchases don't appear to have been adjusted. 1673,500, 1673,500, 1673,500. So we add 242,000, 242, 1, 2, 3, plus 1673,500. We get a figure of 1915,500. 1915,500. We have returns outwards. Less return outwards. Less return outwards. Or purchases returns. And we said that the purchases returns are 6,400 from the trial balance. 6,400 minus 6,400. 400, we get a figure of 1855 100. 1855 100. We less, this is cost of goods available for sale, available for stock, less closing stock, and we are told that our closing stock is, additional information number 4, is 225,000. It is 225,000. So we subtract 225, 1, 2, 3. We get a figure of 1630 100. We get a figure of 1630 100. We get a figure of 1600. That's 100, which is cost of goods sold. Cost of goods sold. Cost of goods sold. Cost of goods sold amounting to 1630 100. 1630 100. So if we subtract from the sales 1630 100, you subtract from sales minus 4214 500, 4214 500, we get a figure of 2584 400. 2584 400. That becomes our gross profit. That becomes our gross what? Our gross profit. That becomes our gross profit. But we have discount received, which is an income. We have discount received, which is what? An income. So we add other incomes. We add other incomes. We add, always remember the format. So we have discount received. We have discount received. Discount received amounting to 42,700. 42,700. 42,700 plus 42,700. 42,700. We're getting a figure of 2627 100. 2627 100. 2627 100. That is aggregate income. That is aggregate what? That is aggregate income. Then we say less expenses. Less what? I always say my format follows the financial reporting format. My format always in the income statement and balance sheet, even on cash flow, whether it's sole proprietorship, partnership, or company accounts, they follow the requirements of the International Accounting Standards 1 on published financial statements. Published financial statements. So we say less expenses. We say less expenses, and like I've always said, when we say less expenses, always start with the adjusted expenses. Always start with the adjusted expenses. And don't forget, once you are through with the adjusted expenses, go to the trial balance and check the expenses which we never adjusted. So our adjusted expenses, our loan interest expenses is 135. Interest, it is 135,000. From here now, yes. Salaries, we have said, total salaries is 1296. Salaries, it is 1296. 1,296,000. Insurance is 122. We are capturing the adjusted figures. We are capturing the adjusted figures. Insurance 122,000. 122,000. General expenses. General expenses, we need to compute the balance. 67,800. 67,800 plus 4,100 minus 46. 46,000. 46, 1, 2, 3. We get 25,900. We get 25,900. We get 25,900. So general expenses, 25,900. General expenses, we get 25,900. And then you look at the other bad debt. We add bad debts. 14,200. 14,200. 14,200 plus 5,400. 5,400. We get a figure of 64,600. 64,600. Bad debts, 64,600. 64,6 what? 600. Then we come checking. Provision has not increased or decreased. Then we come to depreciation. We come to depreciation expense, and we start with the buildings, 96. 96,000. Equipment, 55,000. And motor vehicle, 51,000. 51,000. Those are the expenses that we adjusted. Those are the expenses that we did what? We adjusted. Then we go straight to our question and we look for any expenses which is in a trial balance but was never adjusted. Many students just either pick what was adjusted and then they assume they have gotten all the expenses and then they move on. They miss the ones which were not adjusted. Or others just go to the adjusted, the non-adjusted in trial balance, and they miss all this, which is very, very, very wrong. Once again, I know we are of help to you. If you appreciate what we are doing and you want to support us, all we need is share, like, subscribe, and hit the notification bell so that every time we load this kind of videos, we are able to inform you. Thank you. So we move on and get the list from the trial balance. Get the list from the trial balance. So we have electricity expenses 22,300. Electricity 22,300. Purchase discount allowed 24,200. Discount allowed 24,200. Discount allowed 24,200. You must know the difference between discount received, which is an income, and discount allowed, which is an expense. Then motor vehicle running expenses 15,800. Motor vehicle running expenses 15,800. 15,800. 15,800. Then salaries we have done, insurance we have adjusted. Again, don't record it twice. Whatever you have already adjusted, although it is in a trial balance, before adjustment, don't record it here. Always be careful not to record any expense twice. For instance, we have adjusted salaries, but it is here. We have adjusted insurance, and it is here. So I'm not going to add it there. Recoverable debts, I'm not going to add it. General expenses, I'm not going to add it. Interest, I'm not going to add, and that is the end. That is the end of our expenses. So we now add our expenses to get our profit for the year. We add our expenses to get the profit for the year. 135,000, 123, plus 1296, 123, plus 122, 123, plus 25,900, plus 64,600, plus 96,000, 123, plus 55, 123, plus 51, 123, plus 22,300, plus 24,200, plus 15,800. We get a figure of 1907,800. 1907,800. 1907,800. 1907,800. So that becomes our total expenses. Total expenses. We subtract from the gross aggregate income minus 2627, 100. We get profit for the year amounting to 719,300. 719,300. We get profit for the year. We get profit for the year. Profit for the year. Get profit for the year amounting to 719,300. Once again, I want to urge you, kindly remember to subscribe, like, share, and hit the notification bell. Now, we have done this for the last 16 years. In this country, we are simply the best. I want to urge you, join our classes. Join our classes. Ensure that you join our classes. Contact us using the numbers which are scrolling at the bottom of this video, and you will never regret why you made the decision. Thank you very much. So that's the profit that we're going to capture for the year. That's the profit for the year. And I want to capture it here. I want to capture the profit here. I want to capture it somewhere here so that we will show it in the balance sheet. We will show it in the balance sheet. 719,300. 719,300. That's the figure to show within our balance sheet. That's the figure to show within our balance sheet. 719,300. So we quickly prepare our balance sheet. We prepare our balance sheet. If you have any questions, you can still talk to us. You can still talk to us using those numbers, even as you prepare yourself to join us for our online classes. So our balance sheet, for our balance sheet, we know the asset that we have. We know the asset that we have. So we just get the non-current assets first, and we say Asumba Enterprises. Statement of financial position. Statement of financial position. As at 31st of March 2018. And we know our assets. We know our assets. We have land, we have building, we have equipment, and we have more. And we start with the cost, provision for depreciation, and we have net book value. Our land, we are told it's 1 million. Our building is 2,400,000. Our equipment from the trial balance is 220,000. Our motor vehicle from the trial balance is 260,000. Always remember how to get a provision for depreciation. Get a provision at the beginning of the year, you add a charge for the year, and then you get the final depreciation. So if you look at the land, the one for building, definitely land has no depreciation, so we get it there, we get our million there. But building, at the opening for building, we had accumulated depreciation for building was 260. Our accumulated depreciation for building was 260 plus the charge for the year, 260 plus the charge for the year, 260 plus the charge for the year here, depreciation building 96 plus 96, we get a figure of 356,000. We get a figure of 356,000. So we subtract from 2.4 minus 2,400,000, 123 minus 356, 123. We get a figure of 2,044,000. We get a figure of buildings. We've said it is accumulated depreciation for building is 260 plus depreciation of 96. We get 356,000. minus 2.4, we get a figure of 2044. We get a figure of 2044. Get a figure of 2044. The equipment from the trial balance, we get the opening depreciation for equipment is 103, 123, plus the charge for the year for the equipment. Charge for the year for the equipment here, it is 55,000 plus 55,000, 123. You get an accumulated balance of 158,000, 158,000. We subtract from 220,000 minus 220,000, 220, 123, we get a figure of 62,000. We get a figure of 62,000. Now, motor vehicle, the trial balance, opening balance for motor vehicle is 132,500, 132,500. Then you add the charge for the year. Motor vehicle charge for the year is 51,000. So you add 51,000, 1, 2, 3, you get a figure of 183,500. 183,500. We subtract from 260 minus 260, 1, 2, 3. We get a figure of 76,500. We get a figure of 76,500. You add the 4 together. This becomes 30,44,000. 30,44, 1, 2, 3. Plus 62, 1, 2, 3. Plus 76,500. You get a figure of 31,82,500. 31,82,500. 31,82,500. That is total non-current assets. Total non-current assets. Total non-current assets. Total non-current assets. I want to repeat again. If we are helping you, kindly subscribe, share, like, and hit the notification bell. That way, you'll be supporting us, and we'll be informing you every time we have loaded this kind of videos. We've done this for our last 16 years, and I want to assure you that we are simply the best in our area of specialization. I want to urge you to talk to your friends. Let them also join us. Let them subscribe. I'm sure we'll be of great help to you. So we get total. We get the current assets. We look for current assets. Remember the format always. Remember the format always. Our format for current assets is usually inventory, trade receivables, other debtors, prepayments, investments, bank, cash. Always have it in the mind so that you go checking whether it is there. Checking whether it is there. Definitely our inventory. From additional information, we are given the figure for our closing inventory. We are told additional information number 4. It is 225,000. 225,000. Now, our trade receivables, we said it is the closing balance. Don't go to the trial balance. Don't go picking it at the trial balance. Some students who go to the trial balance take trade debtors. No, we have adjusted. I always told you, by the time you are putting everything within your income statement and balance sheet, always check whether it has been adjusted by your workings. It is very, very, I don't know how to put it. When you've done very good workings, but when you come to extracting information, you're extracting the wrong information. So our closing trade receivables is 1051. So it is 1051,000. We subtract provision for relative debts, 31,530. We subtract 31,530, 1051,000, 123 minus 31,530, 31,530. We get accounts receivables amounting to 1019,470. 1019,470. 1019,470. Then we ask ourselves, do we have any other receivables? We don't seem to have any other receivables, but we have a prepaid insurance. Your prepaid insurance, here we said your prepaid insurance amounting to 32. Your prepaid insurance amounting to 32. So we come here and we say prepaid insurance. Prepaid insurance. Yeah. Now. Our general expenses, like we can see here, our general expenses payable is 4100. Is 4100. It is not 4110 like we have captured there. So we collect here to 4100. 4100. So if you add all that now, you get 762,880. 762,880 plus 4100 plus 15,000, 1, 2, 3, plus 216,000, 1, 2, 3. We get a figure of 997,980. 997,980. 997,980 plus the non-current liabilities. That's total current liabilities plus total non-current liabilities plus closing capital plus 1,500,000, 1, 2, 3 plus closing capital of 2206, 2206, 100. We get 470, 40, 80. We get 470, 40, 80. You get 470, 40, 80, total capital and liabilities. Total capital and liabilities. And it balances with the total assets. It balances with the total assets. That's the way the question was supposed to be done. That's the way the question was supposed to be done. Once again, I want to ask you to support us, subscribe, like, share, comment, and hit the notification bell so that when we load this kind of videos, we will be able to let you know. And kindly invite and inform your friends and also join our online classes. Thank you very much. So after trade receivable, we come to prepayments, and we know that we have insurance prepaid insurance of that 2,000. So we come here and say prepaid insurance, 32,000, prepaid insurance of 32,000. Then we go to the bank. There is no other one there. So we go to the bank. From the trial balance, we get bank balance of 245,110. 245,110 bank. From the TB, 245,110. 245,110. Remember the format. You check whether you have any cash balance. You don't seem to have a cash balance. So we add the 4 items. 225,000. 225,000. 225, 1, 2, 3. Plus 1019,470. 1019,470 plus 32,000 plus 245,110. 245,110. We get a figure of 1521,580. 1521,580. 1521,580. 1521,580. Total current assets. Total current assets. We add the non-current assets to get total assets. We add non-current assets of that 182,500 plus that 182,500. We get a figure of 47,04080. 47,04080. 47,04080. 47,04080. And then where did we get the funds from? We say financed by capital and liabilities. Capital and liabilities. And quickly we go to the trial balance and we get our capital. From the trial balance is 18,52,800. 1852,800. Then we go to, we add profit. We add profit for the year. Profit for the year. And you know, we said our profit is 719,300. 719,300. We add 1852. 1852. 800 plus 719,300. 719,300. Get a figure of 2572,100. 2572,100. We say less drawings. We say less what?
Drawings.
Less drawings. And our drawings are here. 32, this is 6, this is 6, 3, 66,000. So we say less drawings, 366,000. The 366,000 minus 366,000. 1, 2, 3. Get a figure of 2206,100. 2206,100. That becomes our closing capital. That becomes our closing capital. Let me ask ourselves: do we have non-current liabilities? Yes, we have a 9% loan of 1,500. So we say non-current liabilities. Remember the format? Remember the what? The format, we have 9% loan, and it is 1,500,000. Then we go to current liabilities. Always starting with bank overdraft. We don't have bank overdraft. Then we have accounts payable. We ask ourselves, do we have accounts payables? Do we have accounts payables? Do we have accounts payables? And it is there. It is trade payables amounting to 762,880. 762,880. Trade payables. Trade payable. 762,880. We ask ourselves, do we have any other payables which are shown here in our workings? We have general expenses payable here. General expenses payable of 4110. General expenses payable of 4110. Any other payable? Drawings, trade receivable, profit depreciation. Then we look at the trial balance and we check whether there are any other payables. But we actually had this one, interest payable. Interest payable 15,000. We have interest payable of 15,000, and we also have salaries payable of 216. Interest payable 15,000. Interest payable 15,000, and salaries payables of 216,000. Salaries payable of 216,000. Salaries payable of 216,000. We check whether there are any other current liabilities in the trial balance which are payable, and I don't get any. I don't get any. So if we are to add the four, we get 762,880. 762,880 plus 216. 1, 2, 3 plus 15,000. 1, 2, 3 plus 4110. We get a figure of 997. Let me do it again. 762,880. 762,880 plus 4110 plus 15,000. 1, 2, 3 plus 216,000. 216, 1, 2, 3. 1, 2, 3. Get a figure of 997. Something is amiss. 762,880. 762,880 plus 4110 plus 15,123 plus 216. 123. Yeah. Now. Our general expenses, like we can see here, our general expenses payable is 4100. Is 4100. It is not 4110 like we have captured there. So we collect here to 4100. 4100. So if you add all that now, you get 762,880. 762,880 plus 4100 plus 15,000, 123 plus 216,000, 123. We get a figure of 997,980. 997,980. 997,980 plus the non-current liabilities. That's total current liabilities plus total non-current liabilities plus closing capital plus 1,500,123 plus closing capital of 2206, 2206, 100. We get 470, 4080. We get 470, 4080. You get 470, 4080. Total capital and liabilities. Total capital and liabilities. And it balances with the total assets. It balances with the total assets. That's the way the question was supposed to be done. That's the way the question was supposed to be done. Once again, I want to ask you to support us, subscribe, like, share, comment, and hit the notification bell so that when we load this kind of videos, we will be able to let you know. And kindly invite and inform your friends and also join our online classes. Thank you very much.